afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 26th of September and we have as our regular guest, Kelvin Wong, Senior Market Analyst at Oanda, with us today. Kelvin, welcome to the show.
Hey, good afternoon, Brian, and good to see you again.
Now, Kelvin, before we get insights from you, we're going to take a look and see how numbers across the region stack up. We're going to start, however, with cryptocurrencies. Bitcoin is at 26,336. It's up 0.72%. Ethereum is at 1,591. It's up 0.86%. Looking across to regional stock markets, we'll start first with where you're at. The Straits Times Index is down 0.09%. The KLCI, Bursa Malaysia, is up 0.18%. Shanghai is down 0.24%. The ASX All Ordinaries is down 0.47%. The Nikkei is down 0.87%. The Hang Seng is down 0.84%. And rounding out the numbers, we've got the Kospi, which is down 1.24%. Pretty much negative sentiment with the exception of KLCI. Tell us why.
Yeah, precisely, because if we look at the current situation right now, there's a lot of factors that are having this kind of negative feedback loop that spiral into risk asset, as per se equities. Is number one is the rising US Treasury yield curve. So in terms of this Treasury yield curve, yeah, it's kind of being a steepening by the 10-year or over the 2-year, but this particular steepening of the yield curve is a bear steepening instead. That means we start to see the longer end of the Treasury yield. That means the 10-year is actually rising much faster than the 2-year. That means what does it imply in terms of we call it the thinking of the fixed income market is that interest rates are going to stay longer for a higher level for a persistent period of time. So that will actually start to for sure increase the cost of borrowing for corporation. And on the other hand, we start to see the major economy is actually not doing very well, especially talk about the Eurozone. We start to face what I call increased odds of stagflation. That means depressed growth over persistence level of elevated inflation. And closer to Asia, we have the China story right now is actually playing up right now on the negative side of the story, where if we could recall 1.5 years ago, the forefront or the catalyst that actually causes this liquidity crunch in the China property developer market, which is China Evergrande. Right now, in fact, yesterday, they actually one of the units actually defaulted their onshore bond payment. And do not forget, around last year, with the blessing of the China policymaker, China Evergrande has managed to actually negotiate with its creditor on a restructuring plan. But over the start of this week, there's this particular restructuring plan is suddenly put in limbo. So there was actually a meeting was supposed to take shape early this week and late last week between China Evergrande and the creditors to discuss more about their restructuring program. That means, i.e., how are they going to actually package their overdue bonds in terms of what I call either in exchange of equity-linked notes or stretch the bond extent of the bond repayment period, and as well as accommodating some of their outstanding bonds. We call it a fixed income liability to equity instead. But however, this meeting has been cancelled without any reason. So that actually causes a bit of negative scare that potentially Evergrande could be what I call it a call up for what I call a petition to actually wind down. That means we talk about a court case for them to actually start to liquidate their assets to start paying off their legal obligation.
Now, I want to look ahead to tonight. We are expecting US housing data and consumer confidence today. Tell us what are the expectations?
Okay, great. Brian, before we go into the consumer confidence, I think that's an important number out on the Singapore side of the story right now, which is Singapore
industrial production.
Yeah, industrial production is just out a couple of seconds ago. Wow. So the number came in was pretty lackluster on the downside. So market is actually expecting negative 3.1% year-on-year contraction for the month of August. However, it came in quite shocking with a double-digit decline at negative 12.1% year-on-year. So that's actually close. It's a 10-year low. Yeah, in fact, it's a 10-year low. And right now, this IP industrial production is now flashing, has already flashed 11 consecutive months of contraction. So within this 11 consecutive months, the month of August is being the worst hit, which is the numbers are just came in, negative 12.1%. So it actually just to implies over us over here is that potentially this external demand environment is getting weaker and weaker by the day due to the fact of a higher interest rate environment. So for sure, that does not bode well to economy that actually dependent on external growth, especially in Singapore. So pretty much interesting to see that how does it impact the MAS monetary policy that's actually due next month. So that's given the fact that we start to see much more this kind of lackluster, we call it growth numbers, and with inflation, we talk about core inflation starts to temper off a fair bit. Perhaps MAS will be very unlikely to actually continue to have a much more prudent, tightened Sing dollar policy. And with that in mind, we may start to see a kind of much more gradual Sing dollar depreciation against the USD.
Now, coming back to tonight's numbers, US housing data and consumer confidence index.
Yeah, so I'm pretty much concerned about the conference board consumer index, because in the previous release for the month of August, they start to actually temper off from the earlier gains that was seen in September. So September, May to during the summer periods, May, June, July, the U.S. consumer confidence, as compiled by Conference Board, has been pretty much rosy. However, for the August month, it started to actually temper off to 106.1 from 114 in July. So right now, the market is actually now expecting this Conference Board consumer confidence data, pardon me, to come in much weaker again at 105.5. So if we start to see any numbers that between 105.5 and much lower, that means it starts to indicate a second consecutive month of consumer confidence growth decline in US. That means for sure we start to now start to see that in the last few months, from the month of May, the summer months, the earlier consumer confidence boost up is more like a fake hit, whereas right now the reality has started to bite in. That means a higher interest rate cost has started to actually fit into number one, bite into consumer pocket in terms of their residual income for that allow them to spend. And also do not forget over here is that coming in the month of October, where previously President Biden administration what we call it student loan forgiveness program is actually more or less over. That means there will be another layer of what we call it expenses that's coming out of the pockets from the students. That means that could potentially also lead to lesser spending power going forward. And do not forget, oil prices has started to rise in the last 3 months, and the rose itself is pretty much stunning, 20%. So that actually filtered down to diesel, which is one of the key fuel, that vehicle fuel usage in US. So that could actually also take a chunk of consumer disposable income as well.
On that note, Kelvin, thanks for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.